Okay, so good afternoon, everybody. Welcome to the Small Business Roundtable discussion. This is Ann Austin from Austin Tech, and you know I like to keep it real. We are recording this session for those who may have registered for this event and unable to attend for some reason, but you can always catch the replay of the roundtable discussion at www.austintech.com or austintech-smallbusiness.com. And tonight we're going to be talking about how to fix your credit for free. This is something that I've heard multiple times from people who are either trying to do something personally to get themselves set up to start a business and have some issues with their credit, or want to improve their credit score, and or maybe they have been having trouble with credit all their life and they just having a hard time trying to figure out how to do that, and you end up paying a third party to help you repair your credit. Believe it or not, there are some simple things, simple steps that you can take to do this yourself. And you don't really need a whole lot of technology to boost your credit score. I am living proof that I have been able to do this. When I first came out of school, when I first went to school, I was kind of roped up into getting a student loan for a trade school because I thought it was going to be good for me to start out getting some sort of trade. I was a singer back then and I needed some sort of trade. And so I ended up going to Washington School for Secretaries. So if you remember Washington School for Secretaries,
I remember them.
Okay, you remember that school. And I actually got into that school, and it was a good thing for me. But what they didn't explain to me was really the impact of that student loan, which actually ruined my credit. Because when I got out of school, I didn't get the job that they promised that they were going to give me or help me get, and I ended up defaulting on my loan. And so like anybody, I'm struggling around young, trying to work, trying to pay off a loan. And it took me 5-6 years to figure out what credit was all about, how to fix my credit so that I can get a car, so I can qualify for an apartment. And then later on, just being a single mom and then finally getting my finances together, I had to figure out, how do I get a house? How do I upgrade my car? All that kind of stuff came from not having credit or not having the ability to have financial freedom. And so I've been wanting to do this webinar for quite a while now, because I keep hearing some of the repetitive issues that I have run into in my lifetime. And so if you're going to have a small business on any level, you also want to make sure that you are in the best possible position to qualify for funding if you need it for your business, especially if you have some overhead for equipment or things like that that you need to run your business, or maybe you just need to have financial freedom so that you can have breathing room, right? Financial breathing room to do what you want to do on your business or your personal. So that's what this whole webinar is all about. And I apologize for any interruptions as people are popping in, but we're just going to go ahead and get started with the presentation. So just a little housekeeping that this is being recorded and will be posted on our website for future viewing. If you're not speaking right now, please mute your mic. Since it's a small group, I will solicit questions throughout. So if you can please mute your mic so that we don't have any kind of disruptions, because it will be recorded. Please sign up as a free member on my website. Right now, this is free membership for everybody who has either been in my class or worked with me, so that you can get access to these recordings, you can get access to other learning events. Plus, we're going to be working on other type of business networking events that is really going to be unique. I'm trying not to be a typical one and done type of business developer. It's really going to be special and unique to small businesses. So make sure you sign up as a member. And as usual, let's have fun, right? That's all it was all about. So everybody knows who I am on here. I don't need to really do an introduction, but for those who are watching the playback who is not familiar who I am the owner of Austin Tech. I am the CEO and founder. I am the person that hosts all of the workshops and actually come up with these different strategies to help you better your business. I'm specialized in marketing, branding, information technology, all the things a small business owner needs to run their business. And I've been doing this since '97. I have many partners and organizations who I've worked with over the years. And so it just, it fuels my passion to be able to help small business owners, right? So that's what I love. First disclosure statement is that I am not a financial or credit specialist in any means, okay? And I don't work for any. I am sharing this information based on my own experience, based on what I know to this day, working with people, training with organizations that's looking for certain credit criteria. So I'm sharing this to micro businesses, home-based business owners who may need this information, right? This is really important. Before you go to any bank, before you go to an angel investor, these are just simple things that I'm sharing with you that's going to help you with your credit. Okay, so the key takeaways that we're going to be doing in this class here today is that we're going to be learning specifically how credit works. Really, how does it work? Some stuff you already know, but I might be disclosing stuff that you may not know at all. We're going to be talking about how you read a credit report and what it means on when we talk about restarting the clock and how long is it really going to take you to repair your credit. We're also going to talk about how you're going to improve your score and how you're going to maintain and monetize your credit so that you can be prepared for anything. And credit is one of those things where you want to have as a resource versus an expense. Okay, so we're going to be talking about that as well. Okay, right. So if anybody have any questions, please raise your hand. And also I want to remind everybody to please mute your microphones so that we can have no disruptions. Thank you so much. So what is credit? In general, what is credit? Credit is really primarily given to people who don't need the money. I mean, that's really the truth. They really, really do not need the money. They only want to have the money if they want to not spend their own money. Why is that, right? Because you're using credit as a resource to help you leverage, right? So you need to have different sources of income. Credit is one of those things that you can use as passive income. And we're going to talk about that. The other reason why what credit is that so the lender can make money off the interest based on the amount of credit that you use and based on the amount of time that you hold a balance, okay? So they don't mind handing you money because they know that once they give you the credit, you're not going to manage your money and they're going to make money off the interest. If you really think about the interest that you're paying right now for any type of savings account or any other type of money marketing account, if there's interest attached to that, by the time you add all of that up and then you time that by the number of years you had that account, that bank has made money off your credit, okay? So we're going to talk a little bit about that. So why do we need credit? We use credit to pay off a large debt that we don't normally have in our bank account right now, like, you know, a bill or a hospital bill. And Eugene knows about that because he always says that, you know, the number one thing that would kill somebody is medical expenses. And I can attest to that. When my husband was critically ill, there were so many medical bills coming in the door. I was thinking of Eugene. I was like, Eugene, I need to pay off my bills and I'm about to go into debt. But you know what? Thank goodness, you know, I was able to do that, right?
Should have called me.
I know, but you know what? We were in a financial position to be able to pay off that debt, thank goodness. Mm-hmm. But I can tell you early on when I was younger and my first divorce and everything, that I had tons of medical bills and I was in debt to my eyeballs because my kids had to get, you know, they had to get the immunization shots. They had to, you know, had medical issues. I had medical issues and it definitely affects you. So having that financial freedom to be able to pay a large debt was really good. The other thing why we need credit is to finance tangible items, which could be paid over a long period of time. So remember I said that they make money off the interest. So if you buy a new house, if you get a car, if you buy a boat, if you buy anything that is tangible that you have to finance, they're going to make money off that finance, right? So what can we do about that? So credit is, you know, one of those little funny things. And again, some of this stuff you probably heard before, but for those who may not know, I'm going to just kind of indulge and just kind of say what it is. So credit works like this. So they look at your payment history. And of course, they look at how much you pay over time, the types of debts you have, the companies that offered you debt. They're looking at the reliability of how you handle money. It also speaks to your actual character. So if you really look at those three bullets, before they even get a chance to know you, they've already judged you on your performance of money, how you handle money, are you reliable with money, what type of person are you really when it comes to money? And that actually speaks to behavior issues, right? So believe it or not, it's more than just checking your credit and denying you on a few things. They're actually looking at your personal character as an individual about money. When you go to the bank and you apply and they sit down and they tell you, oh, sorry, we can't give you credit, they pretty much had a conversation without you based on these three criteria. Then the second part of credit is that they use it to determine how long have you had credit, whether it was good or bad. They want to know what is the risk. If I lend you this money, would you be able to pay me back? So by the time you look at all those mail-in offers, and I'll say this about mail-in offers, you're not really approved for anything. They're just trying to see if what they thought what they thought about you might be true, but they don't know until you actually fill out the paperwork and send it in. Then they're going to know exactly who you are based on number one up here. And then you'll either get an approval or you'll get a denial application. It also tells them about your spending habits. Do you max out your cards all the time? Are you always in high credit balance? Do you miss your payments? All of those things help them determine whether or not you're a risk. It also talks about the person you associate with too, like, who are you getting credit with? And it's also talking about your debt to ratio. Do you go around just getting debt all the time and you have this huge debt? And you can have two versions of that. So like for me, in my situation, I have a house, I have graduate loans, and I have, let's say I did have a car, but I paid that off. But between my graduate loans and my mortgage, to them, that's bad. Even though it's good that I got a house, it's still bad because it's high debt to ratio compared to my income, right? So that's a catch-22 right there. And we're going to talk a little bit about that as how you can get around that. They're also looking at the type of organizations that actually offer you credit. Are they offering you credit because you're going to have a high interest rate, because they gave you an extra 10 years on your debt because you can't pay it back? This helps them determine what type of interest rate that they're going to give you. Because if someone else can get a high interest rate on the loan that someone else gave you, then they're going to give you a probably similar or higher interest rate because they're going to consider you being a bigger risk, right? So just think about that for a second. They also want to say, okay, do you need someone to help you get a loan? Do you have a joint account, or did somebody co-sign for you? Those are all negative, derogatory reportings, believe it or not, because you should be able to get credit on your own. But if somebody had to help you get credit, that can come off to be a red flag. And the last thing is how many times somebody has pulled your credit report to check to see if they can give you credit. So one of the number one things that I do not do, and I stopped this about 15, 20 years ago, is that I do not give out my zip code when I'm at the grocery store. I do not give out my phone number, and I don't give out anything that links to me. Because when you do that, this is why you get mailings in the mail. This is how you get credit card offers, which are really soft pull credit reports that the company gets that may not really affect your score, but what they're doing is trying to entice you to apply for their credit so that you will get a hard inquiry. Okay, so you got to be careful when you go to the store. If they ask you to be on their mailing list, just say no, because that information is being sold throughout their third parties. And before you know it, you're going to start getting all these weird offers in the mail. And some of them are pulling your credit report. So you got to be careful about that. And if you have any questions or anything, just make sure you ask. So in a nutshell, a credit report is a score, and a score is a reflection on your overall ability to manage credit and manage your spending habits. So when they put these two together, and they do this in like 10 seconds. So anytime you see stuff like, we'll check your credit in 10 seconds, or we'll check your credit in 20 seconds, they're looking for these first three and probably one or more of these other two in the second one. This is how they determine it. And they base this on the score, in addition to the score, you might as well say. And that's when you'll get a letter in the mail saying, sorry, we couldn't give you credit because of these reasons. Okay. So what's the problem? Can credit be good or bad? The first thing is that this is the trap that we all get caught in when it comes to credit. The first thing that happens is we get the first denial application, okay? Either we have a low credit score, or we're being declined because of some other derogatory report that's on it. And it could be like one little thing. It could be like a 30-day late. It could be anything that could cause you to get a decline in your application. And this is when the snowball starts to happen, right? The second thing is that because we can't get credit, or we can't get any resources with money, either through your bank or some other means, you start feeling the financial stress. You can't pay your bills. You lose sleep because your bills are late all the time. And then this also causes your credit to be even worse, okay? Then they don't trust you, no matter who you go to, because you have a low credit score. They don't trust that you're going to pay it back, regardless of your situation. You can call them up and you can explain. It doesn't matter. They don't really care, because remember, the bottom line is they do not get paid if you cannot pay the money back. And that's really the bottom line of it is. It's all business. Bad credit can lead to higher interest rates. So if you are lucky to get credit through an auto or home or department store, they're going to throw higher interest rates, which is going to cost you thousands of dollars. You're losing money out of your pocket. And there's also going to be credit gaps. So you're going to have gaps in your credit where you're going to have good credit on high interest rate, and then you might miss some payments, and then you have good credit again. All of this is going to cause you headache and pain. I'm telling you, I went through the same thing. So here's what I found to be the solution, or at least part of the solution. And then I'm going to show you exactly what I did to fix the situation and to maintain it. And for you guys to join, or whoever joins, I'm also going to give you some handouts toward the end of the webinar so that you can download them. And if you want to use them, pass them on to people who you know that's having issues with credit. This will be a great time to do that. So here's what I've done. The first thing I had to do was learn how to prioritize my bills. I had to figure out a way to execute a budget that I can afford that will keep my credit consistent for a short period of time. And the reason why I say short period of time is because once you get your credit to a certain level, this is when you need to start doing other things to improve it. First, I have to stop the precipitating circle of the problem. So I had to organize my bills, organize how I'm spending my expenses every month, and figuring out how I can execute this plan on a short period of time. The second thing I had to do was that I had to stop letting certain people use my name or my credit for their gain. So if it wasn't like directly for like my car or whatever, I didn't allow my name to be on it. I did not co-sign for anyone. I did not authorize anyone to use my card. I didn't put anybody else's name on it, because believe it or not, if that person does something on your credit, make a purchase or what have you, you're still responsible as the primary account holder. So regardless of what somebody else does, you're still responsible. So that's the second thing. Me and my husband now, we literally got two separate accounts that I can control, and he got one he can control. Because before it was like, oh, we got a joint account, and then every time he spends something, it was just crazy. And I said, nope, it's got to stop. I got to have my own. Take it off, right? The third thing I did was I used my credit to build financial resources. Resources mean different lines of credit that I can use on a repetitive basis that I can pay back and also boost my credit score and keep it at a very high level. Okay, so this is how I had to do it. And I had to be very intentional. I had to be very diligent about it, but I had to fix the problem. So let's start with that. Does anybody have any questions so far? Anybody? Nope. Okay. So the first thing I had to do was pull my own credit score and really understand what it was about, right? I had to pull it. So, so the first thing I had to do, and if I get my slide to work, right? Equifax, TransUnion, Experian, we all know those credit reports. Apparently there is a new one out there called Innovis. Okay, there's a new one out there. And of course, because I'm in business, I also had to look at Dun and Bradstreet. Okay, so the first thing I did was went out and really investigated the differences between the three credit reports. They all do something different. They are not the same. They don't keep the same information. And some companies only report to certain credit bureaus. So even if, let's say my bank reports to Equifax and some of that information gets over to TransUnion and Experian, still it may not be the same information reported. The collector or the debt person who has my debt, they may not report the same to the same credit bureaus. And I was like, okay, if they told them that I paid on time at Equifax, why do I not have this over here? It's an enigma. Okay. Sometimes the credit bureaus will collect information, and then sometimes they don't collect the information. So that was something that I learned through the years. And then sometimes the person who has the debt, they don't always report the same information to the same credit bureau. They may use one or three. And it all depends on who is actually doing the reporting at the time when they send your stuff to the credit bureau. So just kind of keep that in mind. Because of that, there's a lot of discrepancies between all of the reports, right? They make mistakes. This affects your score, your overall score between the three. And we always hear that, oh, we got to go with the middle score. And depending on what you're applying for, whether it's auto, home, car, boat, they all pull the credit report differently. For example, when you're going for a house, they're going to pull 3 credit scores on Equifax side. They're going to pull TransUnion is going to have 3 scores. It's going to do Experian, same thing. And they're all going to have 3 different scores, and they're all going to go with the middle score. Versus if you was to go for a car, they're going to go to Pacific banks that are going to pull from Pacific credit unions or credit bureaus. And they're all going to have different numbers because your credit score is a snapshot in time, and they all use different resources to pull your information. So just kind of keep that in mind. And so, not sure why my screen is doing something weird. So Innovis is a new, I wouldn't say really new, but they are now getting into the credit business. And this is just some little known facts about Innovis. They really don't do primarily credit, but what they're doing now is coming up with another way of assessing a credit report. And then they're using the other bureaus to combine with it. So you're going to be hearing more about Innovis out there as being like the 4th major credit bureau, but apparently there's supposed to be like 6 of them out there that's doing it. But there's 3 major ones, and Innovis is actually coming up doing more of the credit reporting business now, as that's what they're supposed to be doing. And you can actually go to their website and you can actually pull a copy of your credit report, which is what I'm going to do. And also, Dun and Bradstreet also has a way of measuring your business credit, which is called the Paydex score. And there are actually like 3 or 4 scores between 1 and 100 that is used to measure your business worthiness or the probability of either paying or not paying your debt on time. And this is how they calculate that. And so in some of the handouts, I think one of the handouts, I'm going to be giving you some information about Dun and Bradstreet and also about the credit. And we're going to talk about that too. All right, so the elements of your score. Your credit report is a list of payment creditors, histories for as long as you have had credit. Now, one of the myths that are out there is saying, hey, I'll just wait my 7 years and it's going to be gone in 7 years. I hate to tell you this, but if you ever apply for a house, everything that you've ever had on your credit, whether it was deleted or not, is going to show up. The credit bureaus are known for removing certain things from your credit, but depending on who is asking for your credit, for as long as you had anything on your credit, it will show up again at some point, okay? Your job when you apply is to be as honest as you can about what you had on your credit, okay? So this goes to measuring your character, okay? So that was a surprise to me when I got my house, is that I was like, wait a minute, that stuff was like 10 years ago. Why is that on there? And again, it all depends on who is pulling your credit and how they're pulling your credit, okay? It contains all your histories from any bankruptcies, charge-offs, collections, anything you paid on time, student loans, consolidations, anything that you've had on your credit over your entire lifetime is going to be on your report like forever. What most companies and banks look for is probably the last 24 to 36 months. Anything outside of that is pretty much fair game if it happens to be on there. But most of the time they look at between 24 and 36 months. What else? Yeah, credit histories can stay on your credit report for 7 years from the date of the last activity, which I'm going to show you an example. Bankruptcy stays on there for 10 years and sometimes a little bit more than 10 years, depending on if they keep going back and updating that activity on there. It could be on there for like 20 years, right? And inquiries can be on there anywhere from 2 to 4 years, depending on the type of inquiry that you get. And there is a way to merge inquiries or get rid of inquiries. And your credit score is a snapshot in time. It's generally updated every 30 days, but I have seen some places that generate probable scores before the 30 days. So just keep in mind that credit bureaus actually just look at every 30 days. But you do have apps out there like Credit Karma and some of these other apps. They will do a probable score to give you, but just keep in mind that that score is only temporary, and you really should get it from the credit bureaus to be sure what your score is, okay? And this is just a list of the new scores. Is now 850 for the top score instead of 800. And the bad score or the fair score is now in the 670s. 2 years ago, if you had a credit score of 680 and above, that was actually considered very good credit. But now the new very good credit is 740 to 799. So just keep in mind of that. Some of the areas that the credit report covers is going to be in your summary. It's going to give you information about your account activity, any inquiries that you have, any negative stuff. It's also going to give you your rights. We're going to talk about that. And it also gives you information on how you can dispute and repair your credit. This is just a screenshot. I don't expect for you to try to remember this because I'm actually going to give this to you in a download that you can look at. But basically what your credit summary is, your credit report is going to look like, it's going to look something similar to this. So this was taken from an Equifax credit report sample. I actually have one that actually looks like this, where it kind of like starts off giving you a summary of your balances. And of course, this is not my balances, but it'll give you sort of like an overview. So here's one as an example that I kind of want to point out. So here's the Wells Fargo that says, hey, I'm paid as agreed. Everything looks good. I opened it up in 2006 and they reported it in 2010. I don't know why it took them 4 years. So that's a red flag right there. It took them 4 years to post this. Someone had a question. Gina, yeah, I can, the recording is going to be available for this one. So just make sure you had a recording. So yeah, so it took them 4 years to report that you have credit. Now, the reason why this is important, because that's 4 years that they could have reported that you had good credit. 4 years that they could have showed that you paid as agreed, which could also boost your credit score. over time. So not having this reported when it was supposed to have been reported is a red flag to you. You may want to have them correct that information there so that you can get your credit for the time that you actually paid your bill on time. Okay, so that's the first thing. So as you can see, they have $5,000 and the date of payment, they don't even have the payment anything. And then they say the date of the last activity. Okay, so this is August 2010. So this is the area where they start to, the clock stops. I mean, it starts ticking. So once has been recorded, this stays on your credit for 7 years. Apparently, that's what the myth is supposed to be. But because this is an active account, this date of activity is going to constantly be updated every single month, which means every single month, this thing is going to restart the clock again, okay, until you pay it off, okay, until you pay it off. Once you pay it off, and they have the last date of activity listed there, then the clock begins on the 7 years from that last date. So if it took you to 2021 to pay off $5,000, this debt will stay as a history on your credit for 7 years, and it's not going to come off until August of 2029. Okay, as long as you don't cause them to do anything on this account, the last date of activity will be 2010. Does that make sense? Because I know you can call them up and ask them a question, and they will go in here and say date of last activity 2021, and then the clock starts all over again. And you're like, hey, I had this thing more than 7 years ago, but the date of the last activity says that it was updated. Okay, so we'll make sure you guys see that. Okay, so here's another example of a bad one. Okay, so first we have a charge off. Then we have the time that it was open, which is in 2004. It took them 6 years to put it on, and the date of the last payment was 2 years ago. Now this is really bad because it took them 6 years to put it on their credit reports, which means that you could have had credit toward making payments every month, but it's not because it didn't get reported until 2010. But then it turns around and shows that you paid late or you had bad payment history for 2 years. Okay, so this is definitely something that needs to be corrected if this is not correct. Okay, then they say even before that you had a major delinquency, so now you have 3 years of bad payment history, and the debt was a 2,976 charge off. This is a really bad example of a paid debt that obviously wasn't reported on time. It's not really actively showing how you made your payments over that time. It just shows that it's really, really bad. And also it reviewed over 70 months. So that's a lot of time that went by that this person did not get credit for. So just looking at this overall, when you pull your credit report, you want to look for those type of inconsistencies that could cause you to have a bad credit score. All of this stuff is actually counted against you, and just fixing these little things with dates and times and stuff like that can actually change your credit score immediately, because once you kind of contact them and say, hey, listen, there's a problem, and I'm going to show you what you're going to write in a letter to fix it, then they're going to fix it immediately, and your score is going to change immediately after that, at least 30 days. So that, to me, that's immediate. Okay, so let's talk about how you dispute. So the first thing you want to do also is understand the Fair Credit Reporting Act, specifically section 168(1)(I), that talks about how you dispute, or at least what your right is to dispute a claim and what they can and cannot put back on your credit report. So I do have a download for this that I'm going to make sure that everybody get toward the end, so that you can actually read this section in detail, because this is really, really important for people to understand. They don't really put this in your credit report. They kind of reference you to it. So I just want to make sure you do that, because I use this specifically to help boost my credit score like 50 points to get my house. And this was in 2007 and it still works. So the first, and I'm just going to point out a couple things in this paragraph. The first one is just basically saying that you have the right to request an investigation on any debt that you see that have a problem, on any part of it. Okay, you have the right to have inaccurate or obsolete information investigated, disputed, or removed. Okay, and by the act, the credit bureau must investigate and get back with you within 30 days. Okay, 30 days is when they're supposed to get back to you with an official letter telling you the outcome of your investigation. Now, there is an extension. If for some reason that they cannot verify what's going on, they may opt to extend that 30 days an additional 15 days. So that's 45 days in which they have to investigate the problem. That's on their end, but I'm going to tell you what you're going to do on your end. Okay. All right. Now, there are some limitations to the extension. So if for some reason that it's found that they cannot verify that that debt, depending on the debt, they can't get another 15 days, okay, because they have verified that it's done. At that point, they have to promptly delete the information from your file. So, and I'm going to tell you how you want to get them to speed that up, because they have a lot of letters that come in and you get to have the leverage by contacting them. And I'm going to tell you just how easy this is, just knowing this little law. So if they, again, just to review, they have 30 days to investigate any inaccuracy on any part of your file to either update, remove, or remove it or modify it, and they have 30 days to get back to you. They do have a 15-day extension on some cases, but it doesn't apply if it's validated that they can't just verify. So for example, if someone puts something on your credit and they cannot verify that you specifically signed for it or precipitated it or started it, they have to remove it because they don't have any proof that it belongs to you. Okay. And then they have to tell the person or the creditor that they had to remove your information. Now, there is a caveat. Depending on the creditor, if they come back and say, hey, here is proof that this person really should have paid this debt, okay, they can actually reinsert that information back onto your credit report. This is where I'm going to show you how to do the letter and show your proof so that they can't do that, because it can come back on your credit and they have to notify you within 5 business days that, hey, we put this stuff back on your credit report because this collection agency showed us proof that you actually signed for it. And since you signed this letter and they showed your signature here, they both match. Obviously, this is your debt and we're going to put this back on. Okay. So just to kind of recap, you have the right to investigate any part of your credit file. You can request an investigation. And from that investigation, they have 30 days to get back to you, with the exception that they may have a 15-day extension depending on the investigation. But the 15 days does not apply if they cannot promptly verify the debt belongs to you. Okay. After that time, you can request that they delete, remove, however, that file from your credit report and send you an updated credit report. If for some reason that the person who put it on your credit report can prove that it is your debt, they can actually have it reinserted back onto your credit file, but they have to be able to prove and certify that it's yours. And they have to notify you within 5 business days that it's on there. Okay. Does anybody have any questions about that? Anybody? All right. Okay. So here is the slide that you may want to take a shot. This is where you can get your credit report. The first one you want to do is go to annualcreditreport.com. This is free. It is easy. All you do is answer some questions that's from your credit report, and you'll be able to get to Equifax, TransUnion, and Experian. I also gave you their individual websites where you can sign up for a free report. And I often would say that you may want to do that either in writing, because sometimes what you get in writing may not be the same online. You want to get a 360 view of your entire credit. Okay. If you want to, you can reach out to Innovis and pull your credit report. I know I plan to do so. And you can also check out the Fair Credit Act, which I'm going to give you as a download so that you can look at that subchapter in detail. Okay, you also want to get your score. You can get it from the credit bureaus. My FICO website is actually offering free credit reports and scores until April 2022 due to the COVID-19. So if you want to get yours directly from the source, from Equifax, TransUnion, and Experian, you can do that. You can also get it from your bank. So if you have a credit union and they may have access to your score, or if you have Capital One, they're really good at that. Definitely find a way to get your score. And you can also download Credit Karma app and Experian, and you'll have all three of your scores for free. But you still want to make sure that you get it from the source, because again, some of these apps are running on different algorithms that give you probable scores. So you want to make sure you get your score from the source. All right, so here's how you're going to repair your credit. This is what you need to do. If you are planning for personal credit for personal reasons, you need to give yourself at least a year if your score is below 680, and you need to give yourself 2 years if your score is below 580. The reason is because you need to give your credit score time to get back up and show that you have a steady payment history. That is really important. Establishing trust, establishing consistency with your credit is key to getting it, okay? So if you have a credit score of 680, you're already halfway there. You just need to show more consistencies on paying on time and managing your credit. And then for 2 years, you got to work a little bit harder. So that's why you need an extra year for that. For business credit, you need 740 and above and have a completed business plan or pitch deck in order to get financing from a lender or bank when it comes to credit. And that's with any bank. It doesn't matter who you are. You got to have those three things. Okay, so the first thing you want to do is own up to the debt. You're going to locate every single bill you owe, from the house, water, gas, medical bill, whoever you owe. You want to find them all. You're going to validate, you're going to find them, and you're going to say, okay, did I make payments before? Did I do anything in the past about it? Did it ever go to collections? Let me find out what happened to it. Let me go and find out if I made any kind of payments to, whether it's a bank, money order, check. Search through your stuff, find the information that goes along with that bill, okay? Locate their online portal and log in and see if the debt is still there. Some of the collectors, for some reason, will hold on to debt for like years until they decide to either sell it off, or maybe they'll reach out to you at some point. And some of them will just hold on to it because at some point when they do reach out to you, they'll go out to your credit report and really start putting a whole bunch of stuff out there that will really ruin your credit for a long period of time. So you want to, before you even call them up, just go to their website if they have an online portal, sign in and see if the debt is there. If the debt is not there, go to your credit report and look for the collector or the collection agency that owns your debt, okay? And then the fifth thing you want to do is before you get started, you want to create a spreadsheet that you're going to use to track all of the debts that you owe, and also track all the payments that you're going to make on that debt. The reason why you want to do that is because this is the first step of being financial free. You can't build savings, you can't build any kind of freedom with money until you fix the past problems and get them off your plate so that you don't worry about it anymore. You're not losing sleep. It's gone, it's done. Okay, just already just say to yourself, a portion of my paycheck is going to pay off these debts, right? The second thing you're going to do is you're going to correct or dispute, take your power back for your credit. Okay. You want to slowly go through your credit reports, go through all your bills, look for any inaccuracies. And you can have a mistake actually on your bill. Okay. So check your bill, make sure it's correct, make sure they're charging you properly, then make sure that whoever they sent it to, that it's, the balance is correct. Okay. You want to make sure you identify which creditor belongs to which debt so that you can have them all lined up, ready to deal with them. Okay, so you're going to call the collector and you're going to say, hey, I'm just calling about a debt that I had about, $200 or whatever it is. And I just want to see if you still have the debt. And they're going to say, hey, let me check. What's the account number? Now, this is not going to cause them to update your credit report. You're actually just inquiring if they still have the debt. If they don't have the debt, you're going to find the collection agency that do have your debt. And you're going to call them up and say, hey, I'm trying to determine if you have my debt. I'm trying to see how I can pay this off. And you're going to just have a general conversation with them just to verify this is what they have. Most debt collectors will not automatically run to your credit report and start updating stuff. They're going to wait and see what you're going to do. Okay, because their bottom line is they want you to pay the money back, and they already bought the debt from the main collector, right? So they want the money, right? So they're not going to just run and do something really, really quick. They're going to wait and see what you want to do. Okay, now if you cannot find the collection agency, or maybe they changed their number, or the website is not good, you can actually write a letter directly to the credit bureaus requesting an investigation to validate the debt. And you're going to include a copy, your proof of the corrected information. This could be that you paid it off. This could be an explanation of what the debt is about, plus something that proves that you did something about the debt and it does not belong to you, or you took care of the debt and it has been satisfied. Okay. You want to have that because it's your burden of proof that you paid or did something about the debt. And you're challenging the credit bureaus to validate that the debt is still out there. Okay, so that's what you're trying to do. All right. If you're going to dispute something that is not yours or whatever, you still want to follow sort of the same steps. The only difference is, if you want to dispute it, you're either going to go online to the credit bureaus and do an online dispute, or you're going to write a letter. And if the letter doesn't work, you're going to write a statement in your file. Okay, so here's a sample of a credit file letter. This is an actual real letter that I wrote to my credit bureaus back in, 2005, 2004. It was like a long time ago. And this is a modified version of it because I didn't want it to be too long for the slide, but I do have I'm going to give you a download sample of this letter that you can use for yourself. So as you can see, I have the name of the credit bureaus. I had all three of them in this letter, okay? And I was basically telling them that there was a discrepancy on my report. And so the first sentence is pretty much just telling them, hey, I'm writing about a mistake on my credit report. It could be a name, it could be an address, it could be anything. Or in this case, I talked about it was a debt. It was something that I had paid like a long time ago. And on my credit report, it shows that I still owed. And so what I did was I took my proof to show that I paid it. And I explained the situation about what happened to the debt. Right here in the second one, I did a full explanation saying, hey, this is what I did with the debt. I paid it on such and such time, and they told me that it was all paid off. Here's a copy of my receipt showing that I paid off the debt. And here's something from my bank showing that it cleared my bank. And then I go right into the main request and state the Fair Credit Act. That's really important. So I'm formally requesting that they update my file immediately to remove it, update my credit report with it or something, and I want a copy of my credit report in return. And you have 30 days to get it back to me. And then I'm quoting the act saying, you are obligated to do this because the act said that you have 30 days to get back to me. And below is a copy of my credit report to where I got it from. And here is my name, my address, and my social security to prove who I am. It is really that simple. Just writing that simple letter to them, to all three of them, right? This is sort of another letter here that I wrote, talking about removing some other stuff from my file and also quoting the same thing, saying, hey, I need you to update my address. I need you to update my name. I need you to update. Because what I saw in my credit report years ago was that there was another person named Anissa Austin that was trying to steal my identity. And so I pretty much jumped on that and I said, hey, you need to go there and take this off and take that off. This is not mine. This is not me. Here's my proof. And I sent that letter out there and they immediately fixed it and sent it back. Okay. And this is the same thing for inquiry. So if you're trying to merge an inquiry, let's say you went to go buy a car. They're famous for going to like 10 banks just to give you financing. You can actually write this sort of similar letter and said, hey, I went to go buy a car and they went to 5 banks and I ended up getting financing with 1 bank. Can you please merge all these inquiries into one? And they will update that credit report and your score will go up because the inquiries will be merged together. This is another way you can boost your score, okay? And that is also included in the download that I'm gonna be giving you at the end of the presentation, well, towards the end. The third thing is, well, I would say the third or the fourth thing. This is very important. So while you're waiting for your 30 days, what you're gonna do on the 25th day is you're gonna draft up another letter because by 25th day, you're more than likely are not gonna get the response right away. So what you're gonna do is you're gonna draft another letter and say, hey, I sent you a letter on this date and I didn't get a response back within a certain time frame. So you need to give me an update because you're keeping in mind that there's a 15-day extension, right? That could possibly be on your investigation. So what you're saying to the credit bureaus is, hey, I recognize that at 25th day, you still have not validated my debt. So with that, you either have to respond to me or remove the debt. So by the 45th day, my letter is not going to say, hey, I'm waiting for a response. My letter is going to say, you must remove the debt because you did not respond to me in the 45th or 60th day or whatever day it is. Because what you're doing is holding them accountable to the timeline. Remember, they have their own timeline, but if you write the letter, you're literally holding them accountable and they can't do anything but remove the debt. That is the most simplest way you can do it. This is what credit repair companies do on behalf of people. They just follow the timeline and they just write the credit bureaus. If you don't get a response in 45 days, that next letter is going to be, hey, I sent you a letter 45 days ago. According to the Fair Credit Act, you must remove this debt from my credit because it cannot be validated. You failed to validate the debt. And once they get that final letter, they're going to go back and realize that, hey, oh man, we did not respond. I guess we have to remove it from the credit report. And this instantly updates your credit report and your score when they do that. Does anybody have any questions about that? All right.
Yeah, I have one quick question about
Yes.
that.
Mm-hmm.
Is this only done through like snail mail, like regular U.S. Postal Service, or can it be done like online?
Yeah, you know what? You just reminded me something, Wayne. Yes. Now, here's the most important thing too. When you send your letter to the credit bureaus, you're going to send a copy of that same letter to yourself. You're not going to open it. Okay, you're literally just sending it through the mail, because when you send it through the US postal mail, it becomes a legal document. You can do this with anyone. So like, even if you sent a letter telling someone you're going to take them to court, if you sent a copy of that same exact letter to that person by certified mail, and you sent the copy of that letter to yourself and don't open it, you can actually use that in the court of law. Okay, so when I did it, I sent it to Equifax, 3 different letters, and then I took the same copies of the letters that I signed and I sent it back to myself as proof that I sent that. Well, at least I attempted to send something in the mail, was my burden of proof. So, they're not gonna like sign for it or anything like that, because most of the credit bureaus work by PO boxes, but what you're doing is holding them accountable of their timetable, of their own law. That's what you're doing, is holding them accountable to their own law per the act. And if you don't do it, they're gonna be like, oh, okay, we'll just do it whenever we want to. But because you're sending an official letter through the US mail, you're literally sending them an official federal request. Does that make
Okay,
sense?
got it. Yeah, I mean, it mostly does. So just by you sending one to yourself, and it just should be at the same time that you send both letters, that's how you get your proof on your end.
Yeah, because you're showing them that you made the effort to write the letter to them, asking them and requesting them to do the investigation or remove the debt.
Got it. Okay, thanks.
Yeah, and that should be a rule of thumb for like anything, especially when it comes to conflict and money. You definitely want to, if you have to write someone and request something, you want to send a copy to yourself in the mail just as your proof that you communicated that way. Okay, so this is what you want to do to prevent your debt. So one of the things I try to do during that really ugly time when I had to repay my debt and I was still a little bit behind, is that I worked with my creditors. Okay, this can be a little bit embarrassing sometimes, but most of the time, if you don't contact your creditor and you're not working with them, they're not going to help you. They're not going to, feel sorry for you or any of that stuff. I just pretty much laid it on line. Look, I'm a single mom at the time. I'm only making so much. Can you work with me? I can only pay this much. And most of the time, because you're working with your creditor, they will work with you. They will take the minimum as long as you are showing good faith and paying them off. And even if it went to collections or whatever, you can probably still, get it done. And that's what I was going to say, that some of the collection bureaus, they don't go to the credit reports right away. As I said earlier, they're sort of like holding on to it, decide what they want to do with it. So when you call them up, just say, hey, I see you got my debt. I know I owe like $200, but you know what? Can I settle out? Can I pay like $150? Can I pay like $100? And if I pay it, can you just not report it to my credit, because this is my situation. If you're talking to the right person that makes the decisions, more than likely they will work with you. And then you can ask them, can you send it to me in writing? A lot of people don't ask that. Can you send it to me in writing? And some of them will. They'll say, hey, if you pay this much, it will be considered paid in full. Now, what is that going to do for you? Number one, even if they did not send you a paid in full letter, they sent you a promise. They sent you a promise in writing that they will not put it on your credit report, and you can actually use that as leverage. So you take that letter along with your credit letter and your proof of payment, and the bureaus will update it as paid. Okay, because that's one of the things that I did. I just pretty much took that information and say, here you go, Equifax, here's their letter of promise that if I paid this amount, that it will not be reported on my credit bureau. And because I'm reporting it, that they are not going to put it on there as a bad debt. Here it is, it's paid in zero. And when I got my report back, it says balance zero, paid as agreed. Just like that. Okay. This is how you take the power back, because you are not allowing the creditors to put something on your credit that's not correct. You're actually telling the credit bureaus, here is the correct information. This is what I need you to update on my credit report. Okay. And this keeps it from being negatively reported, and it'll actually be in your favor because it will show that you had a debt that was paid on time, zero balance, paid as agreed. It may not be current, but it'll still be more positive than it would be a charge off or a late payment. So that's a lot. I did a lot of them like that years ago. Okay, so the first thing I did to reestablish my credit after I went through that whole hellish mess, right? So I was like, whoo, I can breathe now. I don't owe anybody. I was so happy, right? I decided to go to my bank. And I was not going to go running around to all these different people to try to get credit because that would make it worse, right? So the first thing I did was I went to my bank and I said, hey, I want to establish a relationship. I want to have a long-term relationship. I use the word long-term relationship with the bank to build my credit and to be able to have things later on in life, right? Through the bank. And what that does is that they actually are looking for people to be long-term customers. You know why? Because they make money off your money. When you deposit your check into the bank, whether it be your savings or your paycheck, they are using that money to circulate around to other people, other members within the bank. And they make money off the little interest that they make off your loans or your money mutuals and all that kind of stuff. That's why they want you to open up a checking and a savings account with them, because they know that they're going to be making money off your money. Okay. So they want that. They desire that, right? So you go to them and you say, I want to open up a checking and savings account, and I just want a regular debit card. Now, what you're going to do is you're just going to open that account and you're going to use it very minimal for the first 6 months, maybe a couple little transactions here or there. You're going to start putting like $25 in your savings account. You're not going to touch your savings. You're just trying to establish some sort of consistency with your account. Okay. You're going to go home. You're going to create a realistic budget for yourself to be able to pay all your bills on time. And during that process, you're not going to incur any late payments. You're not going to go negative on your account. You're going to try to keep it as consistent as possible. And this part is the hardest part, because when you only making so much money, or you only have so much resources with money, you really have to juggle that budget around to be able to meet those criteria to pay your bills on time. It was very difficult when I had to do it. And I think I slipped a couple of times where I didn't pay something like quite one time. But what I did was I worked with my creditor and say, hey, I'm going to have it to you on next Thursday, because the pay cycle actually fell on that Thursday and I couldn't meet that actual date. But just make sure you work with your creditor. I can't stress that enough, right? Now, on the 12th month of that year, for that first year, right, depending on your credit score or whatever you're trying to do, you're going to go back and you're going to be checking on your actual credit score at the end of the year. And the reason why I say don't do it during the time you're doing it, because you're going to feel like it's going to take you forever to get your credit score where you need to be. Because when you have a really low credit score, something under 600, and you have bad credit or you don't have enough credit, sometimes it takes about a year for that number to really start like generating the way it needs to be generated. It's going to be stagnant for the first 6 months because you don't really have much of a background. Because remember, your credit score and your report goes together. And if your report is not showing enough consistency, that number is either going to be the same for the first 6 months, and then finally you're going to start seeing it kind of go up, 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 right? So that's why you want to wait until like the end of the 12th month to check your score and look at your payment history to make sure that everything is accurate. Then you're going to do one of the things that I actually did that Carlton Sheets did was I actually went to the bank and I said, hey, I want a line of credit for $300 or a bank credit card, just to reestablish my credit history and all that, right? And after 6 months, I took my $1,000, I went in there and I actually did a loan against my own money. I did not spend my own money. I actually took that money, opened up a second account with the same bank, and then I scheduled automatic payments from one account to the other account. I did not spend that $1,000. I actually took that $1,000, put it in the same bank account, a different bank account in the same bank. And then I set up an automatic payment every single month. They didn't care if I spent that money or not. They just want to see if I was going to pay it back with interest. Now, it was a win-win because the bank got interest and I got to have a loan on my credit to show that I paid it as agreed every single month, right? And because I had a bank credit card on top of that, I had to stay within the 10 to 30 credit unit. And we're going to talk about credit, really what that really means, right? That 30% that everybody keeps talking about. We're going to talk about that, right? So if you're trying to reestablish credit, borrowing against your own money is one secure way of reestablishing a relationship with the bank and also reestablishing your credit at the same time, okay? All right, so let's talk about that. The third thing I did was after I got established and my credit score was above 680, I went to another bank like Wachovia or wherever, and I opened up either a CD or got another bank card or got some other sort of line of credit with the other bank. And I started making payments on time. But I still had to stay within that 10 to 30% utilization rate through all my credit lines from all of them, right? So we're going to talk about that in just one second. So when you're doing this process that I just finished talking about, this right here, I want to go back to it. When you're doing this process, you have to be very intentional. That means you cannot stray off the path. You can't let somebody get you to spend something outside the normal spending habits, because this is how you get caught back into the trap of owing people, okay? You work so hard at this point to not owe anybody. And so at this point, you're literally rebuilding your credit from ground zero. And this is how you're going to do it. If you go out there and you're making a large purchase, or you're helping somebody buy stuff, or you being a co-signer on someone's loan, you're literally ruining your chances when you're at this state, because this is the most fragile state of the whole process. Because now what you're trying to do is establish yourself, your own credit on your own, and not worrying about somebody else in here. It was very difficult for me and my husband to kind of do this process because we are married now, and we're trying to do credit together, but I had to kind of take control of my own credit, and he had to take control of his own credit. And sometimes that's a little difficult to deal with, but I had to do it because I need to have financial freedom. I can't sit up in here and be broke all the time. I gotta have different streams of income, right? So this was one thing that we had to do. And I the same thing for my kids. So the first thing I do is anytime I get credit offers in the mail, I am going to call the 800 opt-out number, and I'm going to tear up that offer. The reason why I'm tearing it up, because that means that they had pinged they did a soft pull of my credit report, which will probably show up as a soft inquiry, which may or may not affect my credit score, but it also leads to identity theft. And I say that loosely because this stuff comes in the mail. It already has your name on it. It already has your address. The only thing that's missing is your phone number and social security number, and they have identity theft, okay? So when it comes into the mail, I immediately tear it up, okay? And I rip it up to the point where they can't get it. The second thing I stay away from is secure credit cards. Secure credit cards are the ones that you use to use your own money for a credit card. Not only are you using your own money for the credit card, but the banks are making money off your money. You're not making money on your own money. You're actually giving them money to report information on your credit report. You want to go for an unsecured card where they're actually extending real credit to you and reporting that to the credit bureau. You don't want to do this on your own funds because the interest rate is higher, and they're not going to report it the way they need to report it, like a traditional credit card would. So anytime you see a secure cards, forget about it. Don't even worry about it. That's a trap, I'm telling you. Any kind of credit card that offer you benefits for high usage. Okay, so everybody sees the commercial that goes out there saying, hey, if you spend $20,000 within the next 30 days, we'll give you airline points. So we'll give you, free dinner for a week. Forget about it. You don't want to have that kind of credit card if they're encouraging you to spend $20,000. How long would it take for you to really pay that back? right? And you don't want any cards that would give you a high interest rate for the one time that you're late. So if you look at the back of these credit card offers, they will tell you that the moment that you're late, you're paying like 30%, 42%, and you never go back to 0% interest. You never go back to that special you had because it only takes one time for you to be late. And then they have all right to charge you interest on your balances. So you want to stay away. You only want the cards that you're going to get from the bank that you're establishing a relationship with. You don't want to get any other. Okay. All right. You want to stay away from checks because, see, as your credit score is getting bigger or higher, you're going to start getting checks from people from unknown banks. One Main is one bank here in Maryland that's notorious from sending you real checks in the mail. They send it to my husband all the time. Hey, here's $3,500. Here's $5,000. Here's $10,000. Just cash this check and we'll be here for you. Don't cash it, rip it up, right? Any loan or financing that is offered to you to pay a debt, it is a trap that calls you to never ever pay it off because the way that they have it, compound interest that are on some of these loans will keep you paying this thing like forever, right? You also do not want to do any kind of velocity banking or waterfall techniques that you see on YouTube until you have a solid way of making payments every month. Until you actually have a credit that you can do velocity banking or waterfall, you can't really make those payments because the moment you make that huge payment to pay all your monthly expenses and then you're trying to use your income to pay it back, if you're not paying some of those balances off, you're going to be paying the bank a whole bunch of interest and it's going to take you forever to get down to zero for you to be able to do that technique again, okay? So if you've never heard of velocity banking, it's actually a technique where you use your credit card to pay all of your monthly expenses, and then you take your paycheck and you make payments towards that credit card until it is zero. But you still have to make your monthly payments, and depending on the amount of credit that you're getting, you want to just make sure that you have a really good solid understanding of that before you try to do that kind of method. The other thing you want to stay away from are apps or technology platforms that promises to boost your score because you are aligning your bills with it. Now, here's the problem I have with that. You already are paying your monthly bills that are not on your credit report, but they want you to put your bills on your credit report so that you can boost your score because they feel like debt to ratio or maybe, you know, the available credit that you are having will help you maybe expand your available credit, which means your credit utilization would be good. The problem with that is that if you fail to pay off your house bill, like your phone or your gas, it's going to get reported as a bad payment time on your credit report and your number is going to go down. So if it's not on your credit report, don't add it. So stay away from those apps that offer that because you can do this. You can have your score go up without using any of that stuff. You don't need any of that. So here's an example on credit cards. So we're going to talk about credit card utilization. So you have a $500 credit limit. And this is a simulation of what your monthly bills will look like. You're thinking you have $500 to spend. However, you really cannot spend more than $150 because $150 really will probably pay your electric bill every single month. It's not going to cover your phone. It's not going to cover your food. Even though you have $500, you really, for 30%, where they tell you don't use more than 30%, you really can't pay more than 150. So basically, even the May bill, you will have to put some money towards your credit card because you'll be over your 30%. Okay. So in order to meet that, you have to pay your balance within the billing cycle, not within 30 days, but within the billing cycle. Now, every 30 days is different from your billing cycle because your billing cycle could be 24 days, or it could be 26 days, or it could be 22 days. So whatever your billing cycle is for your credit card, you have to, whatever you spent, which is this $150, you have to pay that within your billing cycle for your credit to show that you paid on time. Okay, so that's 30% of 500. So you can have a 500 credit limit, but you can't spend more than $150. And so that means that if you're doing this method here, your score is going to go up every single month because you're showing that you're paying your bill every 30 days and you're staying either 30% or below. Okay, that makes sense, everybody? You good? Okay. So let's look at it from a different angle. So let's say you had a $2,500 credit limit between two credit cards. You have $500 on one and you have $1,500 on another. And we have the same scenario of bills. You have $2,500 to spend. 30% of that is up to $750 that you think you can spend out of this $2,500. The problem is it looks and appears that you can pay all your monthly expenses on the $750. So you're like, yay, I could spend $750 and pay my bills and do this velocity banking or do something like that. The problem is that this 30% is actually 30% on both credit cards combined. It is not 30% on one or 30% on two. It is actually 30% on the combined amount of money between the two cards. So that means you can only spend no more than 15% on each credit card, which lowers your ability to spend. How much is that? Only $450. So what happens is if you would have spent $750 between your two credit cards, your card utilization would be more than 50%, not 50%, it would be probably 50% on one and probably 30% on another. But you can't really spend more than 450. So basically you're back over here in this area saying, oh, you know what? I can only spend up to $450. This is how they get you. This is how they get you. They don't really explain card utilization, but your card utilization is really your debt utilization from all sources. So if you have a house, car, any kind of credit card or anything on your credit, they're going to take all the balances that you owe and whatever credit that you have, that's the utilization you need to stay under, 30% or lower. So the higher the credit, the better the interest, the better the money. So that's why they keep telling you that if you have two credit cards, they'll say, oh, you need to apply for 2 or 3 more credit cards to increase your credit score and lower your card utilization. No, you just need to reduce the amount of money on the credit that you're spending. Or what you do is do what we do is that if I have 2 credit cards, this $1,500 will only be used in an emergency. This is a resource to me. This $1,500 can pay for, let's say I'm like Eugene, let's say my husband went to the emergency room and had to go to the hospital. My insurance company hits me with a $1,500 hospital bill. Guess what? I can pay it now because I have a $1,500 resource sitting in a bucket that I can pull from. If I wanted to pay my house bills, I could take this $500, I can buy food with it, I can pay my phone with it, and be able to stay within my $150 balance, right? That's what you want to do. You want to stay within that thing and use it as a resource so that you don't go over your card utilization, causing your scores to go down. You want your scores to go up. So every time you stay within this whole parameters right here, every month, your score is going to go up 10, 15, 20 points. I've seen it. I went from having like a 500 credit score to like well over 720 just by keeping my numbers a little low and using one of my cards as a dire emergency resource. When you're doing business financials, you definitely want to, well, I guess I can probably talk about the 3 C's as what banks look at: credit, collateral, and cash flow. So let's say your personal credit is really good now that I've showed you all this good stuff. And now you want to apply this to your business, right? So you have the credit, right? The credit is there because personal credit is used to gauge whether or not you can handle money, right? So let's say you got your credit all straight. They can trust you. They know you can handle your money responsibly. So now they're saying, okay, what about her business? What about his business? Okay. So if your business is generating some money, that is when they're going to look at giving your business credit, because you cannot obtain credit until you have generated massive sales. Massive sales to banks could be, let's say you do $25,000 to $50,000 a year, or maybe $100,000 a year. And banks love it when you do like $1 million. But they understand that there are small businesses out there that don't make that much. Maybe like 50,000 would be a good one, right? If your credit score is 740 and below, you run the risk of not getting business credit. And this has actually come out since COVID-19, because everybody has been doing loans and the risk is much higher. So they went from 680 to 740 in 2020. So just keep that in mind. If you need like equipment or some sort of overhead for your business, you're going to need at least 740, and you're going to need a complete business plan or pitch deck before you apply for any type of business credit. The other thing they're going to look for is collateral, a way to recoup their money if you should default in any kind of way. So they're looking at real estate that you own, inventory from your business, equipment, any kind of accounts receivables from your customers, invoices and contracts that you may be getting for upcoming projects that you're working on. So they want to see all the different areas that you are getting money into your business so that you can secure the loan. So this is talking about going from a personal loan. We're not talking about personal, we're talking about business loan for your business being under your business name, okay? But it still starts with your own personal credit. And then they're going to look at your cash flow. They want to know what your actual yearly revenue is. What is your profit and loss margins? What your industry is going to look like? And whether or not, if you do have a positive cash flow, they want to see whether or not you've ever been negative. I think my cat Cookie is in here now trying to get some a little attention. So if you hear my cat. So this is the 3 C's that all the banks and finance folks look for when it comes to giving you a business loan. So there is no super myth that they use. They do put it, like if you was ever get business finance, they will put it under your business and under your EIN. But again, you are the foundation of your business. So credit starts with you. And if you show that you're responsible for money, then they can see that your business is also responsible. So they want to make sure you have that. So in summary, credit can work for you if you are intentional on keeping your payments on time, that you pay more than the minimum balance. I pay more than the minimum balance every time my billing cycle comes, and I make sure it's on time because I'm looking at my score going up, especially if I know that, I need it. When you are getting up in age, you also have to consider credit as a resource as well, because when you get up in age, you never know if you may have to move to a different home or if you might need another car. You always want to have the advantage to be in a position to get credit whenever you need it. You don't need credit if you're just living day to day. You only want credit if you absolutely have to have it, right? So that's what you want to do. You always want to know what's in your credit report every single year. I pull my credit report just to make sure that everything is there. You need this for employment reasons too, because some jobs, depending on your day-to-day, I know some people have businesses, but some people also have day-to-day like me. If your employer is requiring you to have a certain credit report standard, you definitely want to make sure you know what's on your credit report and know your score. Know what impacts your score. So as you are building your credit, always look like once a month and say, what did I do this month that caused my number to go this way, whether it's up or down, so that you can know what exactly is impacting your score over time. And again, stay away from the apps, stay away from credit boost gimmicks, stay away from people offering you stuff in the mail. It is all to get you to apply. And then once you apply, they pretty much have your information. Identity theft is on the rise. So Please make sure you protect yourself. Don't give your phone numbers out at grocery stores. Don't give your zip code out. Just let the clerk know, hey, I don't want to give my phone number. I don't want to, give my zip code. You can use the store zip code if you want to put something in the machine. This is all to protect your privacy and to protect your identity. And make sure you keep that relationship with your bank. That is really important because it is already hard enough to get credit as it is. But if you have a really good relationship with your bank, they will definitely help you out, because all the techniques that I showed you today are things that I use personally myself. And once I got my house and everything, we pretty much went right back to ground zero, working on our credit, went right to the bank and said, hey, I need a new car. My car just broke. And they said, here's the approval letter. You can go out there and shop for any car you want. And we went and did that and came back to the bank, and my husband bought a car, and then we ended up paying the cars off. And that's the kind of relationship you want. You want the bank to be able to write you a check and not give you a whole bunch of hassle. But if you take the time to just look at your credit report, write the letters, tell them, show your proof, all that, you're going to be able to do this. You don't have to pay anybody to do it. You can do this all yourself, and you can maintain it yourself without all this other stuff. And so that is what I have for the presentation tonight. I hope this information was helpful to you. Again, here is the slide. If you want to pull your credit report, definitely reach out to them, get the one online, and also send a letter to those 3 credit bureaus or the 4th credit bureaus, and pull your credit report, see what's on there. And if you have any questions about your situation or, advice, just reach out to me. I will be happy to talk to you about it. And again, I hope this was very informational. I'll open it up for questions if anybody got questions. I'm an open book.
I got a question, Ann.
Yeah, go ahead.
Do you recommend, let's say you have 3 or 4 credit cards, but you don't use them, right? You just have the available credit. Do you recommend using them and then paying them every month? Does that help at all to boost your credit, or leaving them the way they are?
Bad credit, well, I would say the lack of use of credit cards is just as bad as not having any. If you're going to have 3 or 4 credit cards, you should at least use it for, like, getting some lunch or something like that, and then paying it off within, your billing cycle. Because if you don't show that you're using them, there's nothing to report. And if there's nothing to report, that's almost the same as not having credit at all. Remember, credit reports are there to gauge your performance and how you manage money, right? So if you're able to manage 4 credit cards, you should be having something spent on that. Even, I can tell you right now, even if you put like Hulu or some sort of recurring subscription on that credit card, and then you set up an automatic payment every month, that is so much better than not using the credit at all, right? Because they want you to use the credit. They're just waiting for you to not pay it on time so they can charge you interest. You get what I'm saying? So right. I would just say put your Hulu, Netflix, or your subscription on those cards, and then set up an automatic payment to pay them off every single month.
Got it. And one more question on that.
Sure.
Do you think 5 is too high of a number to have as far as cards, or do you want to
I wouldn't get no more than that, because what will happen is that it could be a catch-22. You have all of this credit and you have very little performance of how you're managing the credit. You don't want to go more than that. I wouldn't go more than that. I mean, with 2 or 3 credit cards, you should be able to have like a really high credit score if you just manage it right. But if you're constantly like getting debt and you're not really using the debt, then it'll leave like a red flag. Like, what is he doing with this debt? And it could still be like a risk, like you having all this debt. What if something happened and you max out all your cards? You don't want to leave the door open. You want to show that you're able to use and spend it, the way that you need to spend it. Just make sure that between all of the cards that you have, you stay within the 30% across all the cards.
Got it. Okay, thank you.
Mm-hmm. Eugene, you got a question?
I'll let the other person ask the question first.
Okay, go ahead, Kanisha.
So I understand that we were talking a lot about the personal credit. So with business credit, that they go hand in hand, or like, I've been watching a lot of different YouTubers and they're like, oh, even if your personal credit sucks, you can get business credit. Like, is that really real?
Well, there are ways for businesses to get credit. So like the ones that I hear is that, if you have a business, if you have an 800 number, if you have an office, if you have all this stuff and you get people to put stuff on your Dun and Bradstreet report. And eventually what will happen is that these funders that seek people out and constantly hover like hawks over, because I get it all the time. I get people that will reach out to me and say, hey, my business qualifies for 5,000 or 10,000. One person said $50,000. To me, that is what I call predatory lending. You got to be careful, because what happens is with credit reports, and especially the Dun and Bradstreet, is that you can pull your Dun and Bradstreet credit report, but they will not always tell you who the creditor is. Okay. And because you cannot see the creditor, it will be hard for you to dispute some certain debts on there. For example, I believe in one of the downloads, which I'm going to put up here shortly, is that on mine specifically, I looked and I saw where, and someone did this to me too. Like one of these predatory lendings put on there that I had $1,000 worth of credit, which I have never gotten $1,000 worth of credit from any business. And so their job is to make it look like that you got money so that they can come to you and say, hey, we can qualify you, right? There are ways that businesses can get it on the EIN, but the truth be told is they still going to check your personal credit. The real lenders check your personal credit to give you, and then once you actually start the process with the first loan and you're paying it off, then all the other subsequent loans that you get is going to be totally under your EIN. But the first one is always going to be, your credit is always going to be considered in the first one that you're going to get. And that's just the real truth of that.
So there's not a way to build both of them simultaneously, basically.
Yeah, because you will be, because once you get business credit, you still have to keep your personal one up, and they're definitely separate. So even if your personal credit like tanks, if your business credit finally gets loans under its own EIN, then your business is pretty much separate. It's not affected by your personal, but you can't go in there with like 500 credits, 580, thinking you're going to get a loan under your EIN. It's just not going to work. You actually have to get your foot in the door first to get it in on your business, your EIN. Is that makes
Understood.
sense? Right. And then if your personal credit tanks, the risk that you run is if you're not able to pay your business back and later on you need personal credit, you need a business credit, depending on the lender, they may pull your personal credit. So you want to be prepared at all times. Okay. Yeah. Go ahead, Eugene.
Did you have a lot of questions in the last so many minutes? It looked like you went through a lot of stuff. It was really good information.
Oh, thanks.
Because what I was going to say is, if I may, I was going to tell a little bit of my story, what I found.
Okay, go for it.
So what I found is that there was a time my credit score was really low. And like you did, I went through a process of rebuilding my credit. But I found there were a couple other things along the way. One of the things I found was I had my identity stolen twice. And so people had gone out and gotten credit in my name. What saved me was two things. I have a identity theft insurance. Okay, number one, and I recommend people get that because what they did was they not only restored my credit, but they also I was able to get my clearances in the government because it wasn't my loan. Two, the second thing that helped me was that I use several credit monitoring systems. And what they do on a daily basis, anytime someone gets a loan in my name at any type, I get a text message. Automatically, I know somebody tried to open that, and I caught those people right at the red-handed.
Oh, good.
And we stopped disaster from happening because I'm on one of those top secret type government contracts, and you can't have that happening. So I was able to save my credit twice, and also preserve my reputation as far as the industry was concerned. The other thing is that when you have a problem financially, like the COVID and everything, the one thing people make a mistake of is they let themselves get 30 days behind before they ask for help. That is a total disaster. What you have to do, in my experience, is that if you have a problem with your mortgage or anything, student loan, tell them in advance, and
Yes,
they will set up a forbearance and all that, and it will not hurt your credit.
that's right.
You gotta do it in advance. You can't wait to be late. You tell them before you get late, and they will reach out to you and bend over backwards to help you. So if you got any of those type of issues, you get on the horn with the mortgage company and everybody else, and they will defer, and student loans, like right now, student loans are deferred, you know,
Mhm.
and your balance hasn't gone up. But if you're not proactive in these areas, you will get hurt. And being 130-day lateness could stay in your credit report for 3 years. You
That's
know,
right. That's right.
so I mean, these are some of the things I've done to protect myself. One is the credit monitoring. I love the
Mhm.
credit monitoring because every time something happens to my credit, bam, I know exactly, and I caught 3 or 4 different people red-handed. And
I actually had somebody steal my credit card one time. They didn't get as far as stealing my identity, but they stole my credit card number and tried to go and buy something out in California.
yeah,
And they
that's what
literally
happened to me too.
called me. You
Yes,
know, when I tell you sometimes you feel embarrassed calling these creditors to tell them your situation, it's a bittersweet thing because you really trying to keep what you got going on private.
right.
But at the end of the day,
It ain't private.
it's not private because they already know you
They
owe, right?
already
So
know
so they
exactly.
already know you owe. They know that you're behind, right? But if you just call them and just work out your situation, it'll literally keep your car.
Yes,
It'll keep your lights on. It will give you breathing room to figure out what you have to do to fix your credit, right?
yes.
And I totally agree that I actually paid for Equifax monitoring system.
Yep, I
And
have
at
all
one
those there.
point, what I did was I put a freeze on my account at
I've
one
done
point
that too.
because I did not realize that giving my phone number out or my zip code was causing me to have all these soft pulls that was coming out of nowhere
Mhm.
because I was literally saying, oh yeah, I want to be on a coupon. Yeah, and this is something as easy as Ashley Stewart. Like I would go to Ashley Stewart and buy clothes.
Right.
And they would say, oh, you want your phone number? We'll give you 20% off today. And not thinking I gave my phone number and next I was getting Ashley Stewart stuff. But then I also started getting weird stuff I never gotten before. And I said, you know what? I notice every time I do that, I am opening myself up for people to recognize, and especially if you're building your credit score and it starts getting past 680, you're going to be a target for a lot of credit stuff. So you have to be diligent to make sure that you protect your identity at all costs and keep your stuff as private as possible. And I'm sorry you went through that, Eugene, but my sister had identity theft and she can't get credit to save her life today
Oh no,
because of that.
we caught them twice, so I was
Oh,
fine.
thank God.
Yeah, no, because I was proactive. Okay. The other thing,
Yeah.
my other experience is that if you're getting credit card with Visa, Mastercard, American Express, that's one thing. But the store credit cards are
Yes, stay
probably the
away from that.
worst
They are the worst.
because
They are
because
the
what
worst.
happens is that the Visa, Mastercard, American Express, they have to abide by a lot of rules and regulations, but the store credit cards don't. But how they get you to say, we'll give you a 10% discount today. Would you like to have one of our cards? No, you don't want that card. Even if you give you 10 or 20% discount,
Mhm.
because their interest rate they're starting off from Jump Street is way up there to begin with. The final thing I'll say about this is that when I was starting to pay back all my bills, we have something called a rule of 72. And that is, how long does it take money to double?
Mhm.
So when I began paying back the credit cards, I paid back the ones that were kicking my butt the most with the highest interest rates. And once I started knocking those things down, the ones with the simple interest rules, I was able to pay those off. And now the credit scores are really good. But my point is that there is a process, a way to do all of this. And finally, there is a set of credit things you do need to apply for. And as a senior citizen, one mistake I tell seniors do not cut up your credit cards, because if your income goes down,
Mhm.
the credit that you have today, you can't get it today on a low
That's
fixed
right.
income.
That's right.
So don't do that. That's a bad deal to do that, and it's not good on your credit score either.
It's a resource. It's a
It's a
resource.
resource.
Right. So, and just to talk about that inquiry you're talking about now, to add on to what you said, Eugene, is that if you precipitate that, that's a hard inquiry that will stay
That's
on your
right.
report for 2 years or more.
Right.
Okay, because you initiate it. Remember, anytime you initiate anyone pulling your credit for any reason whatsoever, that's a hard credit pull.
Right.
And honestly, your credit score can go down 2 to 6 points depending on the company and what the inquiry was about and all the kind of factors that the credit bureaus use to measure that, right? I will say that if you get like Credit Karma as a start, they are really good at monitoring your credit payment histories and your credit utilization.
Yeah.
Experian, if you have a bank and they use Experian, some of the banks, they give it to you like every 30 days, but if you download the app that goes with that bank, so if they use Equifax, TransUnion, if you download the app and you have a bank that gives you your free credit score, more than likely you'll be able to use that app for free and actually get your score. And remember, your score is a snapshot in time. So
Yes.
just because it's like that today, remember the score, the FICO score 8 can generate a probable score at any time that credit bureaus and banks use to pull your credit history. And so you might say, oh, it's good 740 today, and they pull it 2 hours later and it might be 720 because it's a probable score at that given time. So you always want to have it more than less before you apply for anything.
On the credit monitoring, I use myfico.com because it does all three. Yeah, it uses all three bureaus. And that's how I found out people were trying to get credit in my name.
Oh, wow.
Because it automatically sent me a text and said, did you apply for credit at this place, this location? You know? And then my identity theft, the great thing about identity theft protection was that they were covering me for up to $1 million. Okay. And medical bills, by the way, there's identity theft with medical bills. People get hold of your health insurance card. Do you know you have to respond within 60 days?
Yes.
Else they can keep that on your credit too, you know? So, but when it comes to medical bills, I tell people how to negotiate those medical bills before you pay them. Just don't be late paying them. Now, sometimes here's what here's the biggest scam in healthcare of what I see. What happens is that you go to a hospital and you have a surgeon, and that surgeon might be participating with your insurance company. But what happens is that there might be a radiologist that's based in India or somewhere or some other country who is not participating with your insurance company. And what happens is that when you're coming out of the hospital, you get these bills from all these people you never heard of. So what I do at the very beginning, when I go to surgery, I tell my doctors and providers of service, do not let anybody run tests on me who are not participating with my insurance company.
That's right.
Okay,
that is so true, Eugene, because my husband had to do the same thing.
Yeah, because these people, they come out of the woodwork from somewhere. You didn't even know they had your file. But what they do is they send you a final notice. It's an ultimatum. Oh, we've been trying to reach you for days. Then it's a bold-faced lie. You know, they never tried to reach you. But what it is, they didn't have authorization. So what they try to do, they try to wolf the money out of you, and you don't know anybody. And you're trying to pay because you're trying to protect your credit. So I do the whole thing on healthcare finance, and I explain all these different.
Yeah, we don't want to get you started. Yeah, you know, one final thing I would say about, you know, when it comes to bills in general is, you know, again, it's that due diligence of making sure that what they're charging you is correct. Just make sure that, you know, the date is correct. Make sure that that bill that you have that they sent you is also correct before you go and attack all the other stuff. Because remember, the burden of proof is on you to show, here is the actual bill. This is what I paid. This is when it was reported, and it should be reported correctly on my credit report. Because as I showed you earlier, how it took them 4 years to report something that they had 4 years prior. You know, you want to make sure that you protect yourself. And like he said, you know, for healthcare, same thing when my husband went to the hospital 2 or 3 times. We literally call our insurance company first, make sure that we have the right people in our network. And then we tell everybody in the hospital, The other problem too about the hospital was that some of these places are going to not only give you the bill from the doctor's office, but they're also going to give you the bill from the hospital. Even though they're in your network, you're going to get two bills.
Right.
One from the hospital because
Right.
that's a hospital facility fee.
That's
and then
right.
you're going to have one from the actual doctor that's going to perform the work under your network.
That's
So,
right.
you know, you still
While
going to
you're
have
while you're in the emergency
right.
room.
And these are people who walk in and just say hi to you. These are people who change, you know, the bed sheets. This is any and everybody that's looking at your file outside your door you don't know. But all of those things combined can actually set you up to have like a lot of debt. But, you know, doing your due diligence, making sure that it's correct, challenging it when you need to challenge it makes a huge difference. And I'll give you this last example. So my husband went to a doctor's office and they told him he had to pay a huge deductible, a really big deductible before he could be seen, and he paid it. Come to find out that
They're
the
not
insurance
participating.
covered, they were in our network, but he did not have to pay it.
Oh.
And they ended up giving him a refund, which he's getting this week. But just think about that. If he did not go to someone in our network, if he didn't have the right information, he would not been able to challenge and get that money back.
Yes.
So it's just really being knowledgeable about your debt and being intentional and possessive about your debt. You know, debt is really not a bad thing. It's just the way that we manage it and over time. And I can tell you that if you just follow that relationship, I have banking, I want to say I have a checking account, savings account, I have a line of credit that I use for emergencies, I have 2 credit cards, and I have money in my savings account. So if for some god awful reason that I need to have money, I have abundance of money that I can pull from different directions that will help me in that short period of time. And then I have an ability to pay that debt back so I can regain my resources, right? So that's really what this whole webinar is about, is to help you gain financial resources that you can use so that you can always be in a position to use credit as your resource or to get credit if you need credit. Does anybody have any more questions or anything like that? This is great. Eugene, you got me all revved up.
No, you did a great job. You got me excited.
Well, I appreciate that. And like I said, if anybody has any questions, you know, here's my phone number and my new email, info@awesomtech@smallbusiness.com. And you can also reach me on my website at awesomtech.com or awesomtech.smallbusiness.com. And please sign up as a member to get access to the recordings and access to other events. I try to do these roundtables every single month. And every so often I have other learning events. And also look for my YouTube channel because I'm, you know, trying to build that up as well, and subscribe. And if anybody has any specific topics they want me to cover in the mentoring group or maybe in this type of setting, you know, just let me know. I'll be happy to do so. And I thank everybody for joining and talking with me today. And for those who are watching the playback, if you also have questions, here's my information, and you can also reach out to me. So that's pretty much what I have tonight. This has been a great conversation. Don't worry, I'm gonna get you, Eugene.
We'll talk tomorrow.
Yeah. And again, this recording will be up on the website under recorded webinars if you want to watch the playback. And I'll also have it up on my YouTube channel probably tomorrow or something like that. So, all right. What's
Thanks,
going on?
Ann.
Hey, what's up? Did I answer all your questions, Kanisha?
Yeah, I
Wayne?
was just saying thank you.
You're welcome. Wayne, you all good?
Thank you for all the information, and appreciate it.
No problem. Akima, you straight? I think Akima's there. Gina, Dr. Bell. Okay, I guess we got some people listening in and they can just reach out to me. Gina said, I am good. Okay, well, I am good too. You guys have made me happy today. I got a smile today. All right. Good night, everybody.